Meanwhile, Canada will avoid a recession by a razor-thin margin. But the country's economic growth will remain stagnant due to high interest rates. That is based on a Bloomberg survey of economists. While the Bloomberg poll predicts that GDP will remain unchanged this quarter and rise at a slow annualized rate of 0.3% in the January to March quarter next year. Both estimates are lower than the poll conducted the previous month and forecast development that is much slower than Canada's population increase. Well, the gloomier forecast comes as Bank of Canada Governor and the bank's decision-making council, they prepare to make an interest rate decision on Wednesday. Most economists anticipate that the central bank will begin cutting rates in the second quarter of 2024. At the end of next year, the median forecast places the BOC overnight rate at 4%, up from the prior forecast of 3.75%. The first quarter of 2024 is predicted to have inflation of 3.3%, with the rate dropping to 2.1% by the end of 2024. There are new indications that the Canadian consumers are feeling the squeeze of inflation and rising mortgage and loan rates. Economists predict a 0.4% drop in household spending in the first quarter of 2024. In a country where immigration is driving the highest population increase since the 1950s, this would entail even steeper declines in consumption per capita. And that comes on the heels of news that the poll suggests that the business optimism in Canada is at its lowest level since the COVID recession of 2020. But inflation expectations among both businesses and consumers, they remain strong in Canada.